Multiple Dwellings Relief, Thom Tax. Multiple Dwellings Relief, MDR, offers significant financial advantages for property buyers, especially in terms of stamp duty land tax, SDLT savings. Multiple Dwelling Relief, MDR, is a tax relief provision designed to benefit individuals and entities purchasing more than one residential property in a single or linked transaction. How can I qualify for multiple dwellings relief? When purchasing a property in England or Northern Ireland, you may be subject to stamp duty land tax, SDLT. However, there are some exemptions and reduced rates, including multiple dwellings relief, MDR, a reduction on the SDLT if more than one dwelling is part of the purchase. What does HMRC consider a dwelling? Council tax banding rules have their own definitions of dwellings being a building or part of a building, which has been constructed or adapted for use as separate living accommodation. But again, this should not be seen as determinative for the purposes of SDLT. This means that it is not legally suitable for a permanent dwelling. Yet HMRC seems to favour the stance that it would count as a separate dwelling for the purposes of SDLT. The multiple dwellings SDLT calculation, multiple dwelling relief and property investors. How can you claim multiple dwellings relief? Can non-residents benefit from multiple dwellings relief? Superior interests and long leases. What are linked transactions? The transactions are part of a single arrangement or scheme, or part of a series of transactions. Can you claim for mixed use and MDR? Student accommodation. When it comes to student accommodation, there are various categories that you should know about when dealing with HMRC. Lastly, ordinary residential accommodation that is let to students can also qualify for MDR if it involves more than one dwelling. The law as set out under the 2016 budget resolutions, pre-amendments, said that the 3% surcharge would apply to the whole cost of the transaction if a single transaction pertained to two dwellings, and exceptions here to the surcharge include where the buyer is replacing their main or only residence or does not have any other property interests counting against them. It's worth remembering that these property interests have to be valued at $40,000 or more in order to count against the buyer. This is clearly stated in paragraph 4.1 of the guidance note, but the note does not provide examples of how SDLT should be calculated for linked transactions, where some of the properties may attract standard stamp duty while others have the surcharge applied. Perhaps crucially, the wording of the revised MDR provisions says that account should be taken of the surcharge if the relevant transaction is a higher rates transaction. Bold added. Practical examples: a house with a granny flat and no other property interests. A couple are looking to sell their only home and move up to a larger one with a granny flat incorporated into the property. In this case, it would be very likely that the main part and the granny flat would be classed as two separate dwellings for the purposes of SDLT. There may be a case, however, for claiming MDR without triggering the surcharge. A house with a cottage and a paddock. The two residential elements, the house and cottage, would be averaged and taxed at P550,000, resulting in SDLT of 2x PR17,500 and P35,000. Moving from a house to one with a granny flat while owning other properties. Buying a house with two self-contained flats. There are two garages within the grounds, each of which has a self-contained flat above it. Two flats within the same building. A house and cottage bought in two linked transactions. To work out the actual SDLT owed, you would use a formula based on the relative values of the linked transactions.